You are welcome to my channel. This is Kevin Davis Accounting. So today I would like us to do a number on the accounting equation. Previously I had introduced something about the accounting equation. It was about mastering the accounting equation. And I said that the accounting equation looks at the relationship between the assets of the business and its sources of finance. So that's why it is assets equals to liabilities plus owner's equity. So it looks at the relationship between the assets of the business and its sources of finance. So today I would like us to do a more practical number or a more practical sense of number that is going to help us understand better what is meant by the accounting equation. And I do believe by the end of this, your understanding will be enhanced. So the question says, Ada Limited is a business dealing in general merchandise. Below are the transactions for the month of January. Show the accounting equation and the balance sheet. So they've given us the transactions down. So they are saying he started business with a lorry of 30 millions and cash at bank of 20 millions Uganda shillings. A motor vehicle of 10 millions Uganda shillings was bought on credit from Rooney Limited. Then 3, he bought inventory of 6 millions using a check. 4, bought furniture of 4,200,000 from Juan Sang on credit. Then 5, he used his salary to buy a shirt of 80,000. 6, he sold 2/3 of inventory of 3 millions cash. Then 7, secured the DFCU loan of 5 millions, which was deposited on his bank account to be paid within 1 year. 8, paid Juan Sang 2,200,000 cash. 9, paid utilities of 800,000 by check. And then lastly, he used the business debit card to withdraw 1 million cash for buying a mobile phone for his girlfriend. So that is the number that we are going to solve. It looks easy. Yeah, I know somehow, and some people might find it hard to do, but we are going to do it. So when we define our accounting equation, remember we said our accounting equation is assets equals to liabilities, then plus owner's equity. So ladies and gentlemen, as we are doing the accounting equation, we have to make sure that the assets of the business, the liabilities and owner's equity, they are equal. So that means at any one time, at any one moment, we have to make sure that the accounting equation is balanced and stable. So that means you cannot enter an asset here or without the corresponding entry this side, because you're supposed to make sure that this side balances with this side. So, but not every time that you're supposed to enter this side and this side. No, sometimes you can have changes in assets alone. But for example, you're losing cash to purchase an asset, let me say like furniture. So that means the change will only take place on the asset side. But remember, everything that we do, we must have the same figures, this side and this side. So the very first question says, he started business with a lorry of 30,000 and cash at bank of 30 millions and 20 millions. So I remember telling you that in my videos that anything we start business with, let it be lorry, let it be motor vehicle, furniture, anything you start business with, that amounts to capital. So when you say capital, capital is not only limited to the cash basis. It's not only limited to the money that you have in the bank, to the money that you have in your drawer. No. Even other assets that you begin business with, they make up what we call capital. So they are saying he started business with a lorry. Now, we very well know that a lorry is an asset. So if a lorry is an asset, then we come here and say, lorry. I see some people, usually they want to draw lines here to show how an order that this thing lies under assets, this is a liability, this is owner's equity. Yes, you can draw lines if you're okay with it. And so, but if you feel you can go and you're organized, you can do it my way. You can also draw lines, it is very fine, there's no problem with that. So lorry, they said the lorry was worth 30 millions. That is it. Then they say next that we also started with cash at bank of 20 millions. So you come here and say bank of 20 millions. Now, I told you in my previous video, in fact, if you are watching this video and you're not well sure about my previous video about mastering the accounting equation, first go back and watch that video, then come and do this, because the other one created the foundation for this. Otherwise, here I might be a bit faster. So go back and watch, then come back and watch this video. So lorry and bank, since we started business with them, they tantamount to what we call capital. So we come here and we say capital. And capital is an element of equity, of all owners' equity. So our capital will be 30 millions plus 20 millions, and we shall get our 50 millions. So that is the first transaction. So if we balance off here, we are going to have 50 millions as our total, and we shall have 50 million this side as well as our total. So by us doing this, we are done with our first transaction. So let's go the next transaction. But before we go to the next transaction, the transactions that we have entered here, we are going to keep repeating them. So that means that lorry, until we dispose of this lorry, that's when we shall take it out of the equation. This bank, we shall continue with cash at bank. Maybe if we happen to make any transactions in the bank, maybe if we buy something using cash in the bank, it will reduce. So we are going to repeat it until there is no more transaction that should be taking place, like you're going to see. So the next transaction says a motor vehicle of 10 millions cash, 10 millions was bought on credit, from Rooney Limited. A motor vehicle of 10 millions was bought on credit from Rooney Limited. Now, look at this. They're saying a motor vehicle of 10 millions Uganda shillings was bought on credit from Rooney Limited. Now, we have two things here. One is a motor vehicle, and a motor vehicle is an asset. So that means if a motor vehicle is an asset, our asset side is going to increase. But then we also got this motor vehicle on credit from Rooney Limited. So I told you, when we have a credit or when you get something on credit, that means we have not paid by cash on spot. So it means you are going to pay at a later date. So if you are going to pay at a later date, then it means that this is a liability to that business. So that means if it's a liability to that business, then you are going to increase the liability section by the name of the what? Of the creditor. So this is how we're going to do it. Shall continue with our accounting equation, which says assets equals to liabilities plus our owner's equity. So we are going to reproduce this. We have our lorry, and our lorry is 30 millions. Our cash at bank is 20 millions. Now, a motor vehicle is coming in. So you say motor vehicle, and it is worth 10 millions. Now, this is it. Then, after us getting this motor vehicle here, that means you're supposed to also update the liability side. So the liability, the person was Rooney Limited, and it was 10. Now, some people prefer putting here creditor and then they put the amount of money. Yes, it would be right, but remember, we are in a business and you might have more than 2 creditors. And if you have more than 2 creditors, you want to establish how much does each creditor demand you. So, because in the near future, probably if you happen to pay one of the creditors, you get to know how much is being demanded now of you. But now, if you just write creditors, you won't be able to acknowledge who demands you and also how much they demand you. Okay, so that's why I said that you should name them by their names. Then we shall come here and we say our capital will remain as 50 millions. So when you add up here, this is 60. So if you can see as well this side, you're going to have 10 plus 50, giving us 60 million. So this is what I told you, that we must keep our accounting equation stable and balanced, like we have done here. So we are done with 2 transactions so far. So we are going to the 3rd transaction. And it says he bought inventory of 6 millions using a check. Now, when they say he bought inventory of 6 millions using a check, one, inventory is an asset. Inventory is an asset. So if inventory is an asset, it means our asset side is going to increase by the 6 millions because we are buying inventory. Then remember that I said that they used a check. The moment you see used a check, it means that something in the bank was affected. So if we use the check to buy inventory, it means our money in the bank is going to decrease by 6 millions. Okay, then we shall have an increase in inventory by 6 millions. This is what I mean. We do this, our assets equals to liabilities plus owners equity. So one, we have our lorry, and our lorry is 30. Like I told you, you're going to be repeating this until we come to the final transaction. Now, when it comes to the bank, initially in the bank we had 20 millions, okay? But now they are telling us that we bought inventory using check. So that means our money in the bank is going to reduce. And it's going to reduce by the amount of money that we bought the stock or the inventory. So we are going to say it's going to reduce from the 20 millions minus the 6 millions we used to purchase the what? The inventory. So our money in the bank will become 14 millions. Then we shall have our motor vehicle, and that motor vehicle is 10 millions. And then we are going to bring in our inventory. And our inventory is 6 millions. Like that. So this side nothing was changed. So we shall maintain our RONI limited as 10 millions, and then we shall have our capital as 50 millions. So when we balance off here, we shall still have our 60 millions, and this side we shall have our 60 millions. So this is what I told you, that sometimes we shall only have the changes happening in the asset side. Not every time that you are given a transaction, you shall have to change both sides. No, some might take place within the same side. Okay, all that we need to see here is how to keep our accounting equation stable and balanced. So that is the major aim, to look at it stable and balanced. So let's go to the next transaction. The next transaction says bought furniture of 4,200,000 from Hwan Sang on credit. Now, furniture is an asset, okay? So if we are buying furniture and this is an asset coming to the business, it means that our asset side is going to increase by that amount. But we are buying on credit from Hwan Sang. Now, remember I told you here that Runi Limited is a creditor. So now we are coming in with another creditor who is Hwan Sang. So do you see why I was telling you that we should record the creditors with their names? Because it's easier to know which creditor demands you how much. Okay, so let's construct our equation again. It is assets equals to liabilities, then plus our owners equity. So shall begin with our lorry. and R is 30 millions. Then cash at bank, our cash at bank is 14 millions. Then shall have our motor vehicle, and our motor vehicle is 10 millions. Then we shall have our inventory, and our inventory is 6 millions. Then now we bring in our furniture, and our furniture is 4,200,000. Okay, so when we do this, our total will be 64,200,000. Then we shall come here and say Rooney Limited, and Rooney Limited is 10 millions. Then we have now Juan Sang, and Juan Sang is 4,200,000. Then we shall maintain our capital, and our capital is 50 millions. So on balancing this off, still we are going to get our 64,200,000. So we are also done with that transaction. So you see, it's all about knowing which transaction falls in which part and how does it affect that part. So that's how we're going to be doing the accounting equation. It is very, very easy. So let me come this side and I continue. So the next transaction says he used his salary to buy a shirt of 80,000. He used his salary to buy a shirt of 80,000. Now, sometimes the statement they give you or the transaction they give you will carry so much meaning on how it's going to affect the accounting equation. Now, such a transaction, when they say he used his salary to buy a shirt, now this one does not concern any with the business. One, it's not money from the business because the business was not mentioned anywhere. So it means maybe he got his salary from some other sources, which is not the business. You know, we have what they call the business entity concept. The business entity concept states that the person or the owner of the business is a different person from the business. So the person, the owner, and the business are two different entities. So that means the business is an artificial person. It can sue and be sued just like a person can be. So that means this business is an artificial person. So there is a line between the owner and the business. So when they say he bought a shirt using his salary, we don't know where his salary came from. So such a transaction, we don't record it in the business because it's not part of the business transaction. But if the money he used to buy his shirt was from the business, then we would have recorded that because we are losing cash from the business. So that one becomes a drawing, because a drawing, this is money taken out of the business for personal use. Okay, but now this one is not from the business. It is part of his salary. We don't know from which whatsoever venture this person is in. So that one we don't record it in our books. So let's continue. In the next transaction, they are saying he sold 2/3 of inventory for 3 millions cash. He sold 3/3 of the inventory. He sold 3/3 of the inventory for 3 millions cash. Now, this is a very tricky part. Remember, our inventory is how much? Is 6 millions. Okay. Now, if it is 6 millions and they're telling us that he sold 3/3, that means he's remaining with 1/3. But look at this. 2/3 of the inventory. How much is our inventory? So if you check very well, our inventory is actually 6 millions. Okay? So when you calculate and do the mathematics, you realize you're going to get 4 millions. Okay? Now, this is what we have. But they're telling us that he sold actually these 2/3 for 3 millions. So that means instead of selling them at 4 millions, he sold them at 3. So ideally, when we are doing the mathematics, it means the inventory that we lost was actually 4 millions. Okay? But the cash we received was 3 millions. So that means when you come here on inventory, the amount you're going to deduct is supposed to be 4 millions. But the cash that you're supposed to receive is 3 millions. That means this person made a loss. So if this person made a loss, it means you're supposed to account for the loss as well. Because if you don't account for the loss, then your accounting equation will not balance. So that means we are going to account for that loss. And remember, from my previous video about mastering the accounting equation, I told you profits and losses are always accounted for under owner's equity. If it's a profit, we add, and if it's a loss, we shall deduct or subtract it. So let me show you how we're supposed to do this. So we shall construct our accounting equation still as assets. So we still continue. We shall have our lorry, and our lorry is 30 millions. Okay. Then we shall have cash at bank, and our cash at bank is now 14 millions. Then we have our motor vehicle, and our motor vehicle is 10 millions. Then our inventory. So when we get to the inventory, so if it was 6 millions, then 2/3 of it is 4 millions. That means we are remaining with 2 millions. So you come here and say 2 millions of inventory. Then we bring in our furniture. Our furniture is 4 millions, 200,000. Then when we sold the inventory, we received cash, and our cash was worth 3 millions. I hope that is really understandable. Therefore, when you add up, you're going to get 6,300. So we continue on the liability side. So we still have Rooney Limited, and this is 10 millions. Then we bring in our Hwansang, and Hwansang was worth 4. Okay. Then we come this side and we say our capital, and our capital was worth 50 millions. Now, if you leave it like this, then your accounting equation is not going to balance by 1 million. And because when we lost inventory of 4 millions, we received cash of 3 millions. So we come here and we say we made a loss of 1 million. So in accounting, we put in brackets to show that we are subtracting. We don't put the minus sign. So still, when you add this side, we are going to get 6,300. And our accounting equation is stable and balanced. So I think you can see it's all about understanding the transaction and what's demanding of you. So the accounting equation is very, very easy, and something that should not even give you hard time. Then the next transaction says secured a DFCU loan of 5 millions, which was deposited on his bank account to be paid within 1 year. Now, still, when you actually they're saying that he secured the DFCU loan. Okay. Now, when you receive a loan, they are telling us that it was deposited on his bank account. So remember, we have cash at bank as an asset. So that means our cash in the bank is going to increase, because when this loan was got, it was straight away deposited to our bank account. So meaning our cash in the bank is going to increase. But also a loan, meaning that we are supposed to pay back this loan, it becomes a liability to the business. I told you a liability is a business's obligation to pay. It's what? It's creditors. For example, we have people demanding us and we're supposed to pay them this amount of money. So because of that, a loan becomes a liability. Now, since it's within 1 year, then it becomes a short-term liability, or what they call a current liability. So let us construct our accounting equation. So we shall say assets plus our owner's equity. So one, we shall have our lorry, and our lorry was worth 30 millions. Now cash in the bank is going to increase. Remember, it was 14 millions. Now we are adding on the 5 millions that we have got from our loan, and will become 19 millions. Then our motor vehicle, which is 10 millions. Then we shall have our inventory, and our inventory is 2 millions. Then we shall have our furniture, and our furniture is 4,200,000. And then our cash will come in, and our cash is 3 millions. So we come here and we say Rooney Limited is 10 millions. One sum is 4,200,000. And then we shall bring in our DFCU loan of 5 millions. Then we come this side and we say capital 50 millions. And then we shall have the loss that we made of 1 million to the sale of stock. So when we add up here, you're going to get 68,200. Like that. And this side shall have the same. I think you can see it is very, very easy. Very, very easy. So let's go to the next transaction. The next transaction says paid Juan Sang 2,200,000 by cash. Paid Juan Sang 2,200,000 by cash. Now, remember, one of the creditors that we have is Juan Sang. Now, that's where this thing comes in, what I told you about, that sometimes you might tend to pay the creditors. So when you pay the creditors, if you recorded this amount of the creditors as 14,200,000, then paying Juan Sang, you wouldn't know how much Juan Sang is demanding you. Okay? Now, but here, like we have seen Juan Sang, we are paying him 2,200,000. That means we are going to remain with 2 millions as the amount of money is demanding us. Therefore, we're going to be like this. Our assets equals to liabilities, then plus owner's equity. Now, we start with our assets. We have lorry, and our lorry was 30 millions. We have cash at bank, and our cash at bank is 19 millions. We have our motor, and our motor vehicle is 10. And then we have inventory, and our inventory is 2 millions. Then we have furniture, and our furniture is 4,200,000. Then remember, when you are paying Juan Sang, we paid him by cash. So if we paid him by cash, that means our cash is going to reduce. So therefore, our cash will become 800,000. Remember, we are paying 2,200,000. So that means it's going to become 800,000. Then shall come here and we say, Rooney Limited will remain with 10 millions. Okay. Then we have one Sang. So we are paying him 2,200,000, shall remain with 2 millions. He's demanding us 2 millions. Then we have our DFCU loan of 5 millions. So you can see that is 17 millions. Then we shall come here and say capital. And our capital is 50 millions. And then our loss of 1 million. So when we do this, our total here will be 66 millions, and our total here will be 66 millions. So I think you can see this is how the accounting equation is done, and it is a very, very easy thing to do. So I'm going to wrap up this part so that I can continue. Then after, we shall finish up with our number. So let's continue with the number, and then the next transaction says paid utilities of 800,000 by check. Now listen to this. They're saying paid utilities by 800,000 by check. In this question, when they were telling us, they told us at the end you're supposed to extract a balance sheet, which is the statement of financial position. Now, in the statement of financial position, utilities are like expenses. And expenses do not go into the what? In the statement of financial position or the balance sheet. They're supposed to go into the income statement. So because of that, we are supposed to take off this. Now, it means we are going to subtract it from this, but I'm going to capitalize it under loss. Because when I'm drawing up the balance sheet, utilities are not supposed to be shown anywhere. So that means I'm going to put the 800,000 under the 1 million. So it will be 1,800,000, because these utilities are not supposed to be shown anywhere. They do not fall here. But since these ones, since they are utilities, we are taking money out of the business, they're reducing our equity. Okay? So that means this 800,000 is going to reduce our equity, but we are going to capitalize it under loss, and then we shall subtract it from the bank. So let's draw it up. So we have our assets, we have lorry, and our lorry is 30 millions. Then cash in bank. Now they told us that he actually did what? He paid. So that means our cash in the bank, it will be 18,200. Okay, with the 800 which has been deducted off. Then we shall have our motor vehicle, and the motor vehicle is 10 millions. Then we're going to have our inventory, and our inventory is 2 millions. And then we are going to have next, we are going to have our furniture, and our furniture is 4,200,000. Right. Then after that, we are going to have our cash, and our cash will be 800,000. So when you come this side, we shall have Rooney Limited, and Rooney Limited was 10 millions. Then we shall have one Sang, who is 2 millions now. And then we shall have our DFCU loan of 5 millions. In owner's equity, we shall have our capital, which was 50 millions, and then our loss, it was 1 million, now plus the 800,000 of the utilities, since they're reducing our owner's equity. So when we do that, you're going to have 65, 200, and this side shall have 65, 200. That's it. I think you can see it is very, very easy. It's not something so hard to do. Then the next transaction, they're telling us he used the business debit card to withdraw 1 million for buying a mobile phone for his girlfriend. Now, when they say debit card, of course, it means that we are getting money from the bank. And so that means our money in the bank is being affected. Therefore, our money here is going to reduce by 1 million. And now, the other side, those are drawings. Remember, I told you that drawings, we are taking money out of the business for personal use. Now, this individual or other limited is taking out money from the business to buy a mobile phone for his girlfriend. So because of that, that means that qualifies to be a drawing. So since it's a drawing, all drawings reduce our equity. So that's it. Let's construct our equation. Assets plus owners equity. Now, we start here, shall have our lorry, which was 30 millions. Then cash at bank, remember, we are withdrawing from the bank using, of course, a debit card. So it means we're going to reduce it by 1 million and it will be 17 millions, 200,000. And then we shall have our motor vehicle, which is 10 millions. Then we shall have our inventory, which is 2 millions. Then we shall have our furniture. Our furniture is 4 millions, 200,000. We shall have our cash, which is 800,000. So we come here and say Rooney Limited, which is 10 millions. One Sang, which is 2 millions. We have DFCU loan of 5 millions. Then we shall have here our capital of 50. Then a loss. Then we bring in our drawings here. So that's it. Now, for you who don't know the elements that fall under which, please go back in my video and watch. Go back and watch, because all these things, I spoke about them in my previous video. Now, this is it. So we balance off. We shall have 64, 200, and then 64. Ladies and gentlemen, this is what they call the accounting equation. All the transactions that they have given us, we have entered them into the accounting equation. And as you can see, our accounting equation is stable and balanced. So that's what I told you, that every time you're supposed to make sure that the accounting equation is balanced and stable. So by us doing this, we are done. But now I have the last part, which is construction of the balance sheet. Now, I know I've done a video about the balance sheet. Of course, there's a video concerning the statement of financial position. But now, for the sake of this question, I'm going to just do it for you. Then probably you could go back and watch about the video of the statement of financial position or the balance sheet. I have it in my videos. So let me construct for you the balance sheet. Ladies and gentlemen, when it comes to the balance sheet, when they tell you to construct a balance sheet, the last transactions here, they're the transactions that we are going to take. Okay? Now, for the sake of this, I'm just going to draw up the asset side, then the liability side. I'm just going to do it like this. But still, if you wanted to do it in a vertical way, you could still do it that way. So it is other limited balance sheet. Okay. So we shall begin with our assets. Then our assets, remember, we have the non-current assets. Of course, we shall have here our Ugandan shillings currency. So the non-current assets one, we have a lorry. I hope we all know what non-current assets are. Assets which have tangible presence. Assets whose usage is more than one accounting year. So we have a lorry, which is 30 millions. Then we have a motor vehicle. Motor vehicle is 10 millions. Then we have furniture. And our furniture was 4 millions 200,000. Then we come to the current assets. And the current assets, we have one, we have cash at bank. And our cash at bank, it was 17 millions 200,000. And then we have cash at hand, which is 800,000. So when you add up this, you're going to get 64,200. So we come to the side of liabilities and owners' equity. So I'm going to start with the liabilities. Liabilities, we have Rooney Limited, and Rooney Limited is 10 millions. We have Huan Sang, and Huan Sang is 2 millions. And then we have a DFCU loan of 5 millions. Then we go to the side of equity. Equity, we shall have our capital, and our capital is 50 millions. And then we have our loss, 1,800,000, and then shall have our drawings, which is 1 million. So when you do the mathematics, add here, then after subtract these two, you're going to get 64,200,000. So it means the balance sheet is balancing. So that's all about the accounting equation. Ladies and gentlemen, this is a very easy topic. And I know now by the end of this, your understanding has been enhanced and you can't fail number on this. So thank you so much for watching. This is Kevin Davis Accounting. Subscribe to the channel and share to your friends. Tell them there's free learning taking place here. Until we meet again, it's a bye for now.